Financial Express. New tech to face regulation wall in user harm cases. The government on Tuesday said that it will regulate AI and emerging technologies only through the prism of user harm. The upcoming Digital India Bill will specify no go areas, and the government does not intend to ban any innovation unless it is linked to user harm. Minister of State for Information Technology (MOS) for IT, Rajiv Chandrasekhar said at the second pre-draft consultation in Mumbai. The minister's statement assumes significance as there are emerging concerns around AI regarding deepfakes, cyber threats, inaccuracy, discrimination, and bias, among other issues. We intend to regulate AI through the prism of user harm, and we will create guardrails for AI, guardrails for Web 3.0 and any other emerging technology going forward. We are going to prescribe that in the DIA, Chandrasekhar said. Web 3.0 is a big area in terms of innovation for our startups. We want to be the leading nation, but we want to lead the charge into Web 3.0 with the guardrails defined, Chandrasekhar said. The draft of the Digital India Bill, which seeks to replace the 22-year-old IT Act, will be available for the consultation in the first week of June. Apart from the regulations around the emerging technology, the Digital India Act will define the regulations on big tech companies, separate rules for different intermediaries such as e-commerce, search engines, gaming, etc., accountability of the platforms like social media companies, misinformation, among others. Go First has no flight path yet. Bankrupt airline Go First on Tuesday clarified to the civil aviation regulator it does not have any definitive timeline to restart flight operations as of now. The clarification was submitted in a reply to the show cause notice sent it to by the Director General of Civil Aviation after Go First suspended flight operations. The show cause notice was issued on 8 May in view of the sudden cancellation of flights and initiation of corporate insolvency regulation process under IBC under the relevant provisions of the Aircraft Rules 1937 for their failure to continue the operations of the service in a safe, efficient and reliable manner. The airline had been asked to stop selling tickets. The airline has extended its flight cancellation period till 26 May. A senior DGCA official told FE that Go First has indicated that it was working on a restructuring program before putting out a definitive restart plan. They have indicated that flight operations will be run under moratorium protection, the official said. Modi takes Sydney Arena by storm. Prime Minister Narendra Modi gestures as he delivers a speech during the Indian community event at Kudos Bank Arena in Sydney on Tuesday. Modi said India and Australia are working on a comprehensive economic cooperation agreement and exuded confidence that the bilateral trade will more than double in 5 years. He was previously scheduled to attend the Quad Summit in Australia as well, but the event was cancelled last week. Limited queues, some confusion. The start of the 131-day exchange window for 2000 rupee notes prompted mixed reaction, including the modest queues and confused at banks regarding required identification documents like PAN or Aadhaar. Most banks saw a limited footfall of people walking through the branch doors to swap their 2000 rupee notes for the lower denominations. While banks didn't see a rush, merchants witnessed an uptick in usage. The process has boosted sales in gold and real estate, further emphasizing the impact of the currency transition. Customers flocked to jewelry stores to pay in cash for the precious metal. Some people are willing to pay a premium for the costly metal in order to get rid of their notes. A jeweler in Delhi's Posh Green Park area had to lower the shutters due to heavy client traffic on Monday, and a similar incident also took place in jewelry shop in Noida's GIP mall. Footfall at jewelry stores has increased, almost doubled, and some places. In Gurgaon, a jewelry store salesman told FE, "Subha se bheed hai. There is crowd since morning." GQG's Jain raises Adani's stake by 10% to $1.5 billion. Veteran investor Rajiv Jain's GQG Partners LLC has raised its stake in Adani's group by about 10%, and it will take part in its future fundraising, doubling down on what he calls the best infrastructure assets available in India. Within 5 years, he will like to be one of the largest investors in Adani Group, depending on the valuation, after the family Jain, GQG's chief investor officer, said in an interview. He would certainly want to be the partners in any of the Adani Group's new offerings. Jain said that the value of GQG's Adani holding was close to $3.5 billion. He didn't specify which companies he bought into or what part of investment value came from direct purchases and rallies in Adani's share. Jain has made a profit of nearly 9,000 crore or over $1 billion on his investment in 4 Adani Group's companies in less than 100 days of his investment on 2nd March this year. So far, GQG's investment is in 4 Adani Group companies: Adani Enterprises, Adani Green Energy, Adani Ports and SEZ, and Adani Transmission is valued at 24,659 crore. This is a 59% jump from the 15,446 rupee crore that GQG had invested in the Adani Group companies in March. In March, GQG acquired almost $2 billion worth of shares in 4 of Adani firms from a family trust. That initial investment in Gautam Adani-led group bolstered the companies after they were accused of brazen stock price manipulation and corporate fraud by New York short seller Hindenburg Research, causing Adani Group at one point to shed more than $150 million in value market. The Indian origin investor, who works from the Fort Lauderdale in Florida, said he was unconcerned by the short seller's allegations, which Adani has repeatedly denied, and that Jain characterized as par for the course in India's business context. Swift rises in Maruti Suzuki's royalty payments to parent. Royalty payouts by Maruti Suzuki to its parent Suzuki Motor Corporation surged 40% to near historical highs in financial year 2023 on the back of the best ever sales reported by the car maker. The manufacturer of the models such as the Baleno and Wagon R is believed to have paid around 4,200 crore in royalties last year. As per Maruti Suzuki's officials, the royalty rate of financial year 2023 stood to 3.75% on revenues of 112,501 crore. The company reported an EBITDA, earning before interest, tax, depreciation and amortization, of 11,007 crore and a jump of 96%. Maruti paid the highest royalty of nearly 4,500 crore in financial year 2019. The increase comes little over 2 years after the centre urged car makers to find ways to bring down such payments to their foreign parent entities. While addressing the annual convention of the Society of the Indian Automobile Manufacturers in 2020, Commerce and Industry Minister Piyush Goyal had asked auto companies in India to look for ways to avoid paying millions of dollars as royalty to their parent companies. While Maruti's payouts were on a decline since the minister's speech, it shot up 40% in the last financial year. Rahul Bharti, Executive Director, Corporate Planning and Government Affairs, Maruti Suzuki India, said that at one point in time the royalty used to be above 6 to 6.5% before coming down to 5%. The guidance we have given it that it will hover between 3.5 to 4%, Bharti said. All new models launched by Maruti pay royalties starting at 5%, with the rate starting to taper off after the model achieves an unspecified threshold in volume terms. The royalty for the upcoming SUV Jimmy, for instance, will also start at 5%. This formula regarding royalty payment is fixed and we don't have to change it. Royalty varies from model and model and it depends on the product mix. But broadly speaking, it will remain in the range of 3.5 to 4%, Bharti added. Maruti was previously exposed to currency fluctuations risk when it made the payments in Japanese yen. To counter that, it was agreed that all the royalty payments would switch to the Indian rupee. The switch, which was made in a progressive manner, was completed in financial year 2022. Earlier this the Swadeshi Jagran Manch, an affiliate of the Rashtriya Swamyam Sevak Sangh, asked the centre to impose a cap on the royalty payments and technical fee remitted by the multinational corporations to their parent entities.